Hi, welcome to the Not So Crazy Canuck. Our goal is to entertain you and uncover factual, relevant, unbiased information which might help you become a smarter, savvier investor. I'm hoping that this podcast will send you away with at least one valuable kernel of knowledge, which will help you make a better decision with your investments or in your life. I'm Tom Dusmet, a retired investment professional and founder of localwealthprofessionals.com, an investment literacy platform dedicated to helping you learn what you need to know so you can recognize investments that make sense and also learn what a good advisor should do for you. If you like what you heard here, visit localwealthprofessionals.com for more articles, videos, and even a full-blown investment course. Have fun getting educated. Today's podcast is a bit different from our usual format, but these are unusual times. Today, I'm on my own, not with a guest, but I thought this opinion piece might be valuable to you, my listeners. By now, everyone everywhere knows that there's a pandemic rocking the world. In North America, we've been very lucky. Lucky because the hot spots so far have been China and Europe, which has given us the opportunity to see that this thing is for real and what it will do when it arrives here. It will go from host to host randomly, seeking to infect the whole population. We know that now. We also know by now that those with a strong immune system will likely experience it as a mild inconvenience. In fact, some will be carriers, but will hardly experience it at all. The scariest part of that is those who it can really get to are the frail amongst us, those who are old, those who are with compromised immune systems. These are the people that will really get sick and may die of exposure. Our parents, our grandparents, or people who have other ailments which have made them more fragile. We also know that the tide swell is arriving in North America as we talk here, and the way it affects us will depend on how we govern our actions over the next few weeks. We know now that we have to flatten the curve of infection of the population if our health system is to have a chance of caring for those who will get sick as the virus takes hold. We have to become hand-washing fanatics and learn to stop touching our faces. According to Dr. David Price, a critical care pneumologist, a lung doctor in other words, he says that the vast majority of COVID-19 transmission is droplet-based. And also, according to Dr. Price, COVID-19 is spread almost exclusively by touching your infected hands to your face. And your hands probably got infected by touching a dirty surface. So the bottom line is, he suggests that you wear a face mask partially to protect you against airborne issues, which are really only a problem if you're getting constant exposure, like a nurse in a hospital, but more to keep you from touching your face. We're also lucky that our leaders, who usually take great pleasure in taking partisan shots at each other, have decided to put that form of entertainment aside for the duration. Let's take Kathleen Wynne, for example, who is absolutely no fan of Doug Ford, but rose to his defense when he was criticized for encouraging people to take their vacations, which might not have been his best suggestion as it happens, but she said, look, the guy meant well. He was just trying to keep people calm. I thought that was incredibly impressive of her. And since then, and it's become more clear how serious things are, Doug Ford has also risen to the occasion and has started to have daily communications with the people of Ontario. Frank, honest communications, completely devoid of political overtone. And our Prime Minister, Justin Trudeau, has done the same thing for the most part. Granted, he and his team did try to run one past Parliament when they floated their first draft of the Emergency Measures Act, but quickly withdrew the most offensive sections of their proposal to get the bill passed unanimously. Also, the Canadian bill takes care of everyday people, something that the US equivalent barely does. That's scary. I'll address that a little bit later, but suffice it to say that I think our chances here in Canada are much better than if we were in the US. Just for a start, if I were to get sick with COVID-19 here in Canada, I'd get whatever the best care was that it was available, and I wouldn't emerge from the hospital bankrupt. That same care in the US might leave me with a bill for $30,000 or more. And if I didn't have a premium insurance plan, and about a third of Americans don't have that luxury, I might have a huge problem. It could leave me with massive debts, possibly leading to personal bankruptcy. Mr. Trump says he wants to make America great again. Well, he's well on the way to achieving that goal when it comes to COVID-19, unfortunately. At the rate things are progressing, right around the time he wanted the US economy to start ripping and roaring around Easter, that would have been around the time when the virus will be in full parabolic acceleration. In other words, going straight up in terms of number of cases that are identified. And as of this presentation, the US is certainly number one for COVID-19 cases at over 200,000 of them and well over 3,000 deaths. So by Easter, the USA could be the world dominator on this stage, having the most cases and hopefully not, but maybe the most deaths too. It's a sad, sobering thought. And don't get me wrong, I don't wish this on Americans. I don't wish this on anyone. My comments are purely based on the math, though. The math isn't going to lie. But the big issue, and the reason I wanted to talk to you today, is because COVID-19 is the intro for what concerns me even more. And that's what the economy will look like once we focus on going back to normal. One thing's for certain, if the economy was debt-laden around the end of 2019, that may look insignificant in comparison to what the picture could look like post-COVID-19. The wide open throttle of spending to help people through this crisis will increase national debt everywhere by gigantic sums. Adding to this, everyday people and corporations too will have burned through what reserves they had, so that when we emerge from under this COVID-19 umbrella, we may be in uncharted times in modern history. Here's a few examples. Let's take Texas, which is a huge economic engine in the US. In February 2020, only 2 months into the year, they were showing on track for 16.4% growth year to date. Massive. But 1 month later, by March, they were at minus 35.2%. The economy had basically stalled. Then let's look at share buybacks. What are share buybacks? Well, they're a tool that the companies use to boost their share price. Why do they want to do that? Well, obviously, everybody who's an investor likes a higher share price, but especially the CEOs do too, because their bonuses are based on it. But look what's going to happen post-COVID-19. Any of the companies that accepted bailouts are going to be banned from doing any share buybacks for over a year after they've accepted those bailouts, after they've paid back the bailouts. Sorry. So when they're going to have to show good earnings the hard way by actually earning the money, not borrowing vast sums to do financial engineering with. So let's drill a little bit further into this. Let's use Boeing as an example. Boeing's been in the press all year because of the MAX 8 fiasco. And that, coupled with other things, has hammered its stock price. But since 2013, the company borrowed over $43 billion to buy back stock, almost all of it over $100 a share. And late last year, Boeing was still trading close to or more than $300. Now, with the COVID-19 thing having pretty much shut down airlines and their other problems, the stock broke $100 to the downside the other day. But then along came the whisper news that the US government was going to use $60 billion of taxpayers' money, $60 billion of taxpayers' money to bail them out along with a few airlines. And by the way, those airlines were also doing share buyback programs to bolster their stock prices. So guess what? Looking at Boeing, Boeing suddenly goes from under $100 a share, just under 100, to over 150 over the space of 2 or 3 days. Well, that looks great for the shareholder short term. We'll see how it works out over the next little while. But how fair is that to the US taxpayer to have to finance this huge saving plan? And by the way, how does that encourage CEOs to be better managers if they can make all these horrible mistakes and then get completely forgiven and given all kinds of money to start all over again? Now, let's look at some of the rumblings from company owners and managers who are saying that if economic activity is frozen for any length of time, they could run out of cash. If they run out of cash, in other words, they can't operate their business anymore, they become insolvent, that could lead to bankruptcies. And that could lead to an economic depression. That's a very, very scary thought. The first to experience the pain, of course, are always, and have been in this case too, contractors who see their work drying up. But after that, it's company employees. Now, granted, the Canadian government, for example, has tried to put in place something which is going to protect companies which keep employees employed, so that everything's sort of in place and they're there when they need to start up again. But the problem is it's very complicated, and they haven't figured it out with Revenue Canada. And companies are going to be very worried about whether they're actually going to be able to receive the money or not. Because if they give the money to the employees and then they don't get paid back by the government and they haven't had any revenue, the company itself could go bankrupt. So unless the government makes it very straightforward and simple, they're probably going to lay people off. And in fact, we're seeing welfare rolls swelling to more than they ever have in modern history, with people being unemployed. And this is probably part of the reason why Trump wanted all this bad stuff to just go away, so that everyone would go back to work and not have the economy blow up on his watch. Well, unfortunately, COVID-19 really doesn't care what Donald Trump thinks. The issue you probably care about right now is how you're going to survive this mess. You're probably thinking, how's this going to affect my job? What's it going to do to the value of my house? How's it going to affect my ability to buy what I need? And am I going to still have a retirement fund when this is all over? That's assuming I had one in the first place, of course. Well, when the world goes back to whatever the new normal is, jobs will come back. At least most of them will. Some probably won't. But for sure, things are going to be different. People's savings are going to be depleted. Governments are going to have huge debts they didn't have before. If they had big debts before, they're going to be even bigger. Companies are going to have taken on all kinds of debt as well. So there's going to be more debt than ever before everywhere. And so how will that affect taxes? Presumably, if the governments have big debts, they're going to have to tax us more, but will they be able to? And will people have the money they need for the items they absolutely need? What's going to happen to house prices, car sales, travel? Is there going to be a travel industry when we go back to normal? And will Canada be protected somehow? Well, that doesn't look all that promising either, unfortunately. I wish it did. But we had huge issues before COVID-19. Alberta was on the ropes due to insanely low oil prices, because the Saudis and Russians were fighting over who could produce more oil and charge less for it. And all our pipeline projects were tangled up with complex disagreements over whether they should be built or not. Didn't look good. And if we compare our country to a country that has a similar economy, that would be Australia. And it depends on resources. And they had real estate booms very similar to ours in Melbourne and Sydney. Sydney almost looked identical to Toronto and Vancouver. Australia has reported the worst economic numbers in 90 years. And we're not focusing on all that stuff right now. We're just focusing on not getting sick. And that's what we should be doing, by the way. But once our physical health is no longer at risk, we'll get concerned about our financial health again. So if you have some investments, perhaps in the form of retirement savings, which are causing you concern, and maybe you're wondering what you should be doing about them, my suggestion is, please don't panic. And before you do anything, ask yourself a few questions. First of all, do you have any idea what you own? Do you understand what you own? And if you own mutual funds or segregated funds or exchange-traded funds, do you know what those funds contain? And then, did you pick those funds for yourself, or did someone pick them for you? And if someone else picked them for you, did they make the right choices for you? And then when it comes to cost, do you know what it costs you to own your investments? I mean the whole cost, not just the part that goes to one part or the other, but the whole cost to own them. And then next, are you a passive investor? In other words, did you buy a package of investments, kind of left them alone for an extended period of time, maybe adding to the package from time to time when you had a little bit of money? Or were you an active investor, somebody like, say, a Warren Buffett, who knows what he owns, knows why he owns it, knows what he expects from it, and is prepared to dispose of it if it ceases to meet his criteria? So, which were you? Were you that active investor like the Warren Buffett guy? Or were you a passive investor who just bought a package of investments and left them alone? Well, if you're in that first camp as a passive investor, how long can you afford to wait for things to blow over and get going again? Obviously, if you're in the 25 to 40-year-old range and you're well employed and you have a little bit of cash laying around and the market pulls back, that could be a fantastic opportunity to get a leg up on the market by buying some when it's cheap. Great idea. But does that apply to you if you're 3 years from retirement or maybe 3 years into retirement? Maybe not. Well, if you're in that approximate retirement age group, what should you do? Well, I like to focus on staying unbiased. After all, Local Wealth Professionals is all about providing Canadians with factual, relevant, unbiased information so they can become smarter, savvier investors. So I'm going to advise you that what you should probably start by doing is getting a little bit educated. Learn a little bit about how investments work. So for example, could you explain to your spouse or significant other why each of the investments you hold are in the accounts you have? Are you happy with the prospects for each of those holdings? And do you have a clear idea what the full cost is for you to own the investments you have every year? And by the way, when you were looking for those fees, were they easy to find, or was that a job in itself? After thinking about these questions, are you looking for some tools so you can get up to speed on some of this? Well, those tools are available. There's lots of them on the internet to help you learn what you need to know. For example, the financial literacy platform that I've been constructing for the last 3 years called Local Wealth Professionals is available to you for free. It's on the internet, and it contains a full-blown investment course in relatively simple language and a collection of articles and videos. And of course, it also has the archive for the Not So Crazy Canuck podcast, which you're listening to right now. Local Wealth Professionals was created to be a knowledge library for people like you. Knowledge is power. And you need to have the knowledge to have the power. If that sort of makes sense to you, I suggest you check it out today. And the website is www.localwealthprofessionalsplural.com. Also, if you found this interesting, please share it with everyone you know. And like it too, so others will want to look at it as well. Comment if you want to. And if you are enjoying the podcast, subscribe to the Not So Crazy Canuck. And please, stay healthy, physically and financially. Are you enjoying the Not So Crazy Canuck so far? If so, check in next week for another episode and listen to another great conversation and pick up another kernel of valuable knowledge. Thanks for listening in.